Hey everybody, Economic Ninja here. Let's do this right. Hey everyone, Economic Ninja here. As people are waiting for the Federal Reserve to lower interest rates, they're begging for it. You have to understand that millions of Americans are seeing their credit scores plunging. This is out of Newsweek. We're going to go over this story, and I'm going to explain why this is a big deal and how this plays into the greater theory of when rates should come down, what the Federal Reserve does, and all that kind of stuff. I want to teach you all of that in this video. Also, if you are in debt, heavily in debt, or you're seeing your credit score plunge and you want to raise it, I put together 2 courses for a stupid low price of $49 for both courses. Thousands and thousands of people have raised their credit score and they have gotten out of debt for good. Links down below, and I'm not joking, this is how I'm going to build my company, by showing you, proving to you how buying real financial education can change your life. I'm going to make you a customer forever. That's my sales pitch. If that's a crazy sales pitch, then don't do it. If you think that's a pretty fair sales pitch, do me a favor and type 1 if you agree. All right, now, I've told you this before. People are begging for lowered rates, but the Fed always lowers rates when it's already over. The decision has been made. The economy is turning down. Why? Because the Federal Reserve wants to be the savior. Okay, this is Satan's demonic system. They want to be known as the savior, even though they created this situation in the first place. All right. They created this situation where people are losing their credit scores because they're out spending money that they don't have. They started with low rates and then the rates went up, right? And then people get squeezed. They don't see too far into the future and they get squeezed. They think because of normalcy bias that rates are always going to be this certain rate. You know, their credit card debt is going to be at a certain rate. Their home is going to be at a certain rate. And they don't realize it until they get squeezed because rates slowly go up. Then the Fed lowers rates, and that's when things go bad. All right. It says here, the credit score of millions of Americans have plummeted in the first quarter of the year as a result of rising student loan delinquency rates following the end of a years-long pause on federal payments. But it's more than just the student debt. Okay. According to a recent report by the Federal Reserve Bank of New York, nearly 6 million students, 6 million student loan borrowers, nearly 14% were 90 days or more delinquent or in default between January and March of 2025. This increase in delinquency rates across the country, accompanied by a drop in credit scores, represents not only a significant challenge for millions of Americans, but it also has the potential to have dramatic ripple effects on the U.S. economy. Let me explain why. This is very important to understand. About a year and a half, 2 years ago, I started doing videos on the state of the delinquency rates with student loan borrowers and how it was so massive and it's going to create really bad things. Well, now we're there. So many of these student loan borrowers, they borrowed too much, they can't pay them, they delayed the payments, and now they're in trouble, and now their credit scores are screwed. Here's the bad thing. Those people now cannot buy a house with a mortgage. They cannot qualify for new credit cards or they're super high rates. And what that does is it slows down the real estate economy and the retail economy, because a certain percentage of our country are just consumers. All they want to do is spend money they don't have because they want to impress people that you really shouldn't try and impress. And what that does is it slows the wheels of the economy down, because that specific amount of people borrowing money they can't afford to pay back, that keeps the economy going. I know it sounds crazy, but this is how it happens in every cycle. So now you're going to see the housing crash accelerate even more. You're going to see retail sales come this next December be much, much lower than they should be, but normally, right, in a normal 7 to 10 year cycle, because those specific borrowers, now their credit scores are destroyed. Okay, so you're going to see a tipping of the scales, and it's going to be downturning in the economy. And there's nothing the government can do. There's little bandages they could do, like with COVID, because most people don't realize in 2019, the economy was collapsing, worse than the Great Recession. So bad to where banks didn't even trust each other, and the interbank overnight lending rate spiked to 12.5%. To give you an idea, during 9/11, the week of 9/11 and the week of Lehman Brothers collapsing, those collapsed, or what I mean is the interbank lending spiked, right? 6% and 6.5% respectively. Okay. 12.5% is what it went to in September of 2019. And what happened 30 days later? A flu that came out of nowhere. And then it gave the Federal Reserve and the government free will to just print money like crazy and give money to people. This is exactly what happened in 1920 when the Spanish flu came out. Okay, you can't make this stuff up. Type 1 if you're getting what I'm dropping off here, if you're picking it up. Now, says here in Newsweek, why does this matter that all the Americans are losing their credit scores? Being delinquent on one student loan payment can have damaging impact on borrowers' credit scores, which can in turn make it much harder to make some big purchases, such as buying a car. Please let me pause here and tell you, if you have a low credit score, and there's nothing wrong with admitting it. I've had low credit scores in the past too. Type yes or no if your credit score is low right now. If it's yes, fix it now. You've got a handful of months to raise it up, because as this market collapses, you can then take your good credit score and take advantage of amazing debt opportunities. Because what's going to happen is mortgage rates are going to plummet. I see a day in the next couple of years where you actually see negative interest rates. I know it sounds crazy, but that could happen under this administration, just to try and spur borrowing. And the thing is, if you have a bad credit score, you can't borrow. And what's going to happen okay, here's another thing I want to point out. Type 10 if you get this. Interest rates on cars go to 0 when the economy is in the crapper, okay? The reason why they go to 0, and you're like, how can they make money off 0 interest rates? Because they got to move the product. And a lot of companies like Toyota Financing and all these car companies that actually own their own financing, like GM owns their own financing arm, right? They've got to move the product. So they've got to give it to you at 0 rates because they can't move it. So you need a good credit score during a crash. You need a thick binder for your credit. I'll teach you all that stuff in the course. It's important for people to understand this. Because you're going to be able to take major advantage of a downturn. That's where you need to be. Okay. It says new data from the New York Fed's report suggests that millions of Americans will have a harder time getting auto and mortgage loans. I'm reading this for the first time ever in front of you. Okay. You can't make this stuff up. I'm already hitting these points. They're going to have a harder time getting auto and mortgage loans at a time when many are already struggling with historically high monthly payments and rising costs across the board, or could face even higher interest rates. All right. This is the time to act. Now, I taught 2 courses on this because there's so much information to pack into one, into even 20 videos on YouTube. And the truth is, I've put videos out on this for free, and it's hard for people to grasp it and all that stuff. So if you want the 2 courses, they're on sale together for $49. How to get out of debt forever, and how to turn around and change your mindset. That's the biggest thing, your mindset change. And then how to build your credit score. I have students that were started watching this channel 4 years ago. They were in debt, up their eyeballs, no credit score, and now they're moving into their first homes. They've got a mass, 700 plus credit score. I mean, Sandy comes to mind, one of our subscribers. One of you, Ninja Nation, this is the time to build that credit score up. This is the time to get out of debt. Do it now, because I want you in a year from now, 2 years from now, to be laughing all the way to the bank while you're signing mortgage docs and getting loans for assets that are pennies on the dollar. Okay, don't be a part of the crowd. Don't be a part of the masses that are losing things. Be a part of the small crowd that are gaining assets during this time. All right, with that being said, I got to go. The Economic Ninja is out.